Hey, before I begin, follow my personal account. So this is my personal account. That's where I interact with people in a personal manner, you know. And this is where I do most of my trading on this account. Um, this is more like a Finster account, but for my trading. Everything trading. This is where you're gonna find everything trading, right? So on this video today, I'm going to show you pre-market analysis, no, post-market analysis of this previous week, right? So what happened? We started on Monday, right? We started on Monday, but if we go to the daily time frame and then we find a bias, it appeared that our daily time frame was we had a bias which was bearish, right? Because we had a break of structure here, right? The break of structure immediately told us that, we're fucking bearish. You know what I mean? And for the fact that if I zoom in very closely, I just don't want to get rid of my candle data. But you see from here until here, from this candle until this candle, we have a fair value gap, right? And then what's happening is when a fair value gap is created the previous week, that means the market is going to try its level best to rebalance that. And another confirmation we had that the market is going to be rebalance at fair value gap and then continue to be a little bearish was the fact that over here, this candle, we had a break of structure. Now it's a combo. We have a break of structure and then we have a fucking fair value gap. So pretty obvious that, yeah, the market might change sentiment in the week. We just don't really know where exactly our, we're excuse me for that, where exactly our turning point is, but it was on Wednesday. On Wednesday, that's when we had our swing low. Beautiful things happen on Wednesday. It's very algorithmic. But then here, this is where the fair value gap threshold was met, but not to the fullest because we still have a gap from here, this candle right here on Friday. Now let's go to the, I don't know which time frame I was in. Was it the 15-minute? Excuse me for the background noise. Okay. Excuse me for that. What time frame was I? But yeah, still, it doesn't matter. So on Monday, we created our highs, right? And then we created a low. Now, all the time, what happens in trading is the lows that are created, they're gonna be broken, right? They're gonna be broken 70% of the time. The lows are gonna be broken. Lows the previous day. Monday low was broken on Tuesday. Tuesday created a new low. That low wasn't broken on Wednesday, but it was broken on Friday, right? So out of 5 days, lows are gonna be taken out all the fucking damn time, right? So you always gotta make sure you're above the daily open because there's a high chance that you target the low. Because if you take this candle right here and then we take our daily open, right, and then we see where the market reacted from here. It reacted from after a liquidity run, which is right here, and this looks like a demand area. So this is where our price reacted in this demand area. I don't have time. Let me just right, reacted from this demand area, and then it went on to break the previous day low, which was on Monday, right? So same thing happened again, but today, Wednesday, was different. I was surprised that Wednesday was like this because normally liquidity sweeps and liquidity runs always happen on Wednesday, but it was different this time. We had a range, we created a range, right? And when we created a range, we created liquidity, and then there was the Asian low was also part of the liquidity. So when Bloomberg released CPI data, CPI stands for Consumer Price Index data. When it released that, that's when now we aim for, since we have liquidity over here, it meant that our premium zone was valid, right? It was valid, and then our price reacted exactly at the mean threshold, and then it spiked downwards. In the very same day, since the highs and the lows have to be taken out, remember, highs and lows have to be taken out every week, most of the time. It took out the lows from all the previous day, and then it took out the highs from every other previous day in the week. And then on Friday, created a new high, right? When it created a new high, this means that the market sentiment at the moment, we are bullish because we're changing market sentiment, because the market sentiment, this is a new high. It has broken the Monday high, right? The Monday high, which means that market sentiment at the moment, we are still fucking bullish. We are bullish. So at the moment right now, for next week, I would suggest that since from this low up until this high were discounted, I suggest from next week we look into a buying bias, right? So this is a low hanging method. What I recommend is you take your order blocks from exactly at the extreme, right? Because we don't have that much confluence. Well, I don't have that much confluence to take a trade from in the middle of just right below the equilibrium, right? I'm not so sure about that. And the fact that our sentiment is heavily bearish. Well, if it's heavily bearish, that means, well, it's pretty risky to take a trade from using a low hanging fruit method. You know, the low hanging. I'll teach it in my trading boot camps. Remember, so every Sunday I hold trading boot camps, right, where I teach how to spot things like these. So this is just the tip of the iceberg, right? You need to know a lot more. You really need to know a lot more. So this is just basically post-market analysis of the CPI data release week, which happened on Thursday. This is why we have a very large spike. Bloomberg released CPI data. Thank you for watching. Remember, subscribe to the channel and fucking follow me on Instagram.